Hey, Las Vegas, thanks for joining us back here on Realty Check, your local Las Vegas real estate news show. I'm Trish Williams.
I'm Tiana Carroll.
And we have our guest today with us, Blake Levitt with KW, Keller Williams. He's part of our KW family. Woo-hoo. And we're going to be talking commercial today.
Yeah, so Blake, you're a returning guest to our show. And yes. It hasn't quite been 6 months since the last time we've talked to you. But these 6 months have been quite a change, right?
Oh, definitely.
Yeah, so I'm very interested to get back into that and see what the changes have been, because Blake's in commercial. If you didn't see last episode, he does commercial real estate at KW.
Multifamily, specializing in multifamily. So we're going to talk about what's happening in that multifamily market. Because as our residential market is changing, so is multifamily too. So we're excited.
I think people are starting to think about that multifamily a lot right now, because I know in the last 3 weeks I've had multiple people calling me say, hey, I'd like to pick up an apartment building, or what do you have for duplexes, or stuff like that. So I'm like, okay, well, let's see what's going on. So that's interesting. I hope that's optimistic for you.
Yeah.
Rents are
like,
still,
send them to me.
Rents are still very healthy. And I'm sure we're going to get into lots of statistics. I know we're going to get into lots of statistics. I'm seeing them here. But
Dude's analytical. Yeah. He likes it. What can we say?
Also, though, I was talking to someone just last night that's looking for to purchase a home as a rental, and the interest rates are so high right now to cash flow on that. It's going to be very challenging. And so we started looking into digging around into fourplexes and stuff. And it was like, okay, these are going to be able to definitely have more potential for cash flow, even though it looks like the prices are higher. So yeah, it's I can see how you're in your line of work here, in your expertise, that is something that's still flourishing.
Yeah, definitely.
Yeah.
All right. Well, let's not get into that yet, because we do have to do what we do, which is first cover our numbers, talk about some headlines that we've seen in the news this week, kind of what's going on in real estate, and then we can play in the commercial and multifamily playbooks.
And what would I do without you keeping us on track every week?
I'm like, focus, people. We got numbers. It's because it's like, what do they say? The KW Kool-Aid is take the big chunks or the big rocks.
Uh-huh.
Yeah, I'm not a numbers person, so let's just get those out of the way. Be done.
Eat the frog. Eat that frog.
Yeah,
there's a book, Eat That Frog. Like, you get the biggest, ugliest frog first and eat it, so it's out of the way. The rest of the day is all good.
Okay, well, let's eat this frog.
Eat this frog. What are the numbers?
All right, so our single-family homes, the numbers are 5,117 available. So we're down.
We're down like 2,000.
Yeah.
Yeah. So inventory is going down again. And are you seeing, I've been talking to everybody, it's getting busy out there again. We are having a spring.
Yeah. Oh, yeah. Oh, yeah. Well, here, we're 2 weeks away from spring officially starting, but all of the same indicators that happen each spring, talking about people coming out of the woodworks to see if they can get financing. People who know they can get financing have already started to put their ducks in a row. Everybody was, we're going to wait for the crash. But that seems to be like, now we see the bottom of the barrel. So people are going, oh, no, I don't want to sort of wait myself out of a good time to buy. So we're seeing that interest in the market, which is great, because I think we all love that.
Yes, and as is the trend. Like, we kind of seen this. We've been talking about this for the last couple of weeks, and now the news is finally reporting that they think that we're seeing the bottom as well, because we're seeing a big uptick in activity.
Yeah. So our single family homes are down, right? 5,117. And our price decreases are also down, 720. But our sales this week are up.
That's what we want to see, right?
Yep.
540. So that is an indicator that we are not. It's not just a thing. This is actually happening.
Right. So sales being up, but our inventory going down sort of goes, oh no, don't wait till there's no inventory left in spring. So you do a lot of listings.
Yes.
And you have been going on listing appointments, I know, because I'm talking to you on the car ride.
That's what I do every day.
So what are you seeing with your sellers? Are they eager to get on the market, or are they sort of just feeling around?
Well, they're more eager to get on the market now. We don't really have, I think over the last few months, people really had an eye-opening time where they're like, this market is changed. It's not fake. We're not, so they are eager to get on the market, and they're being more realistic now, which is, oh my gosh, that's so great for me because, over the last few months, there was times where I was just like, your pricing is not realistic. I can't list this home, like it's
Right.
not, it doesn't make sense for me or for you just to sit on the market. So now I'm getting like real sellers that are really motivated, that are really ready to do what they need to do. And I'm telling them, I'm making sure that they know what to expect in this market. Like we don't,
I bet you've been getting calls from people that you said, that's not a real price, you can't list it that. And they're like, I'm going to go with somebody else.
I'm not.
And then all of a sudden they're calling you going, okay, you were right. So that's the price it's going to sell for, apparently.
Did I tell you that just happened like twice? Literally twice. Like someone I met with 3 or 4 months ago, and then they like went with someone else, and then they're like, hey, you were right, and I want to come back to you. And I'm like, yeah, thank you. So,
You're like, oh, well, I guess I'll let you back in.
yeah, that's okay. They're easier to work with that way.
Oh, yeah. Yeah.
Well, now they're more realistic.
They're more
So that's
realistic,
great.
and they trust you because
Yeah.
they already seen that it wasn't.
Well, yeah, when you tell something you think this is what's going to happen and that happens, then it's like, oh, look at all this.
Yeah.
She's right. And
Yeah.
we like to work with people who are right and smart and know what's happening in the market.
Right. Warning to buyers. I think this is very important that to just warn these buyers, like the opportunity of getting your closing costs paid, getting your rates bought down, getting these amazing deals is probably not going to last long. Like, this is the time.
Yeah.
When's the time? This is the time.
Yeah. Well, if we're seeing inventory going down, and then I'm seeing on my side an uptick in buyer activity, people coming out of the woodworks, people are wanting to dip their toes in to see what real estate's going to look like for 2023 for them. And they're going to be coming on the market, especially if the interest rates drop. Like Fed met yesterday, and they just raised the interest rate a quarter instead of the half. And that's what we were hoping for when we talked about it last time we were met, that would be a possibility, and it transitioned into reality. Yay. So and now our interest rates have been playing in that low 6s, so people are not so afraid of it anymore. Mm-hmm. So don't wait yourself out, because the good deals, the seller concessions, and the inventory may not be around when our spring really kicks into action in about 2.5 weeks.
We're in spring right now. It has started. It is so busy out there right now. It's different. It's crazy, but there's still deals. And another thing is, I've been talking to builders. There's some great deals on escrow fallouts right now. Like if you are out shopping, I would take a look at those. They're offering some great deals, but they're not like forever deals. There's homes that fell out of escrow that are on the market right now, and they're going to give you a great deal on those homes. But when they're gone, the builders have no intention of continuing on things that they haven't already started on. They're slowing down and backing off their building because they don't want to have to sell every house at a deal.
Right. And that makes sense. They want to make their profit. Right now, they're just getting rid of what they're stuck with.
Yeah, absolutely. So that's going to be a small window, and then we're going to see prices back where they were, I'm sure. The buyers are speaking up right now. This is where I see it, is the buyers are speaking up right now saying, like, we want homes. The Fed sucks. We don't like them. We hope it'll get fixed later, but that's not going to stop us from wanting homes. Buyers still want homes. People still want to be in homes. They got on the sidelines for a bit to see what was going to happen with the market, but when we seen that it got to a point where it stopped changing, then they were like, I'm not going to stop.
That's what's been in the news all week long. Every article, everything that we're coming back to is like, oh, the end is in sight, and oh, it's not going to crash the way we thought, and oh. So now I think buyers are like, oh, I need to get in there and really make something happen while I still can.
Yeah, absolutely. So, Blake,
You've
that's
been
what's
awfully-
happening in the real estate residential market. What is going on in the commercial multifamily market? And when we talk commercial, we're talking more like multifamily, not like retail spaces, right?
Right.
Right. Okay, so what is happening in the multifamily market? First off, what is the multifamily market?
So the multifamily commercial market is anything 5 units or more.
Okay. All right. So apartment buildings and bigger sixplexes. Is that a
Yes.
word?
Yeah.
Is it really?
Yeah.
Take it.
How many plexes are there?
There's
How high can we go?
20 plex.
When does it turn into a plex to an apartment then?
Is there a thing? Is there like a thing where it turns from a plex to an apartment, or no? They're just plexes.
Well, they're all, like I always call them apartments, but you
Okay.
can call them plexes too, like 30-plex, 100-plex. I mean, they're all one complex.
Okay.
Yep.
Oh, complex. Yeah, I guess so. I guess so. There's your vocabulary.
Commercial vocabulary.
Commercial vocabulary lesson for the day.
Be like, we'll go over like, what's a rate cap? What's it? No, I'm just kidding. Do a whole definition show.
So when people are searching for homes and they contact you, they want to purchase multifamily. They're going to be looking at the rent rates, their profits and everything. How is all of that looking, and what's happened over this last year since last time we met and the market shifted? What's happened in your world?
So asking rents have decreased 1%
Okay.
year over year. Values have decreased year over year since buyers want higher cap rates and higher income to compensate for the higher interest rates.
Yeah.
The vacancy rate is 9.2% now. So the
Wow.
vacancy rate has gone up.
So give us a comparison. Last time you were here 6 months ago, right before everything shifted, do you remember what the vacancy rate would have been at that time?
Yeah, so that year the vacancy rate was 5.
Okay.
Oh wow, so it's almost doubled.
Yeah.
Wow, that's
So that would be a caution then for somebody looking for the buyer rate. And then I guess they've got to keep an eye on unemployment too. You want to be able to put people in those homes. How's that affecting you?
Yeah, the unemployment and then also the population growth.
Oh, yeah.
So year over year, the population has grown about 13,000 people. Last time it grew about 22,000 people.
Oh.
So the population growth has slowed down too.
Okay.
Oh, that's interesting.
interesting. I was just
so
gonna
we have the California people stopped coming. Everyone says we always grow from California people. So,
Well,
yeah.
if you remember in 2021, that year, it was just so like incredible, you know, how values went up and everything. The rents increased 22.8% in that 1 year, and now it's like they've decreased 1% because rents just got so high. So people looking to come here, they're like, wow, the rent's that high. Maybe I can go, you know, a couple states over and get cheaper rent.
Yeah, absolutely.
Don't
and
go
that
a
makes
couple
perfect
states
sense.
over. This is a better state.
Yes, it is.
This is a better state. We have so much more to offer.
No state income tax.
Yeah, we have great no state income tax. We have great amenities. We have sunshine, beautiful sunshine.
Yes. and-
Lovely days lately. Well, except for the other day it rained.
Yeah, that's good. We need it. So our population growth has slowed down a little bit. Sales volume, 3.3 billion year over year.
Yes.
Okay. What are you seeing as far as like demand? Has that slowed down a lot?
Yeah, that has slowed down quite a bit because of the high interest rates.
Really? So, I mean, of course, it makes perfect sense. The same thing. Are the rates the same in your industry as they are in residential? Like residential, right now we're in the low 6s, high 5s in some scenarios. But what about commercial rates?
Right now, for traditional loans, we're in the mid 5% all the way
Okay.
up to 8%.
Okay, so they're hovering around the same
Yeah.
category or the same field as ours.
Yeah, after the Fed meeting yesterday where they said, you know, the economy's starting to slow down, you know, we might see rates come down a little, which I hope so then the buyers can come back and start investing again.
Right, yeah, because you know, at the end of the day, they're looking at what are they going to profit at the end, and
Right.
Well, yeah, it's all numbers, right?
yeah.
yeah, and if
Show me the money.
the mortgage company's profiting more than they are, it just doesn't make much sense.
Yeah.
Yeah. So, how about refis on that? If somebody were to get into a commercial property right now at the rates where they are, I know in residential you can refi usually within a few months if the rates improve or get better. Are there any restrictions on that in commercial?
Right now, I really haven't seen anyone refi. I know about one, their rate, they refied and they were at 6.25.
They refied into a 6.25?
So what they
What were they
were
at
they?
before?
So what they did was they were actually at 3% before, but the value went up so much that they wanted to take the cash out and
Oh.
buy more property.
Okay,
yeah, I
but
get it, but ooh, that's That's a hard one.
Yeah.
That is
Yeah,
a
but
hard
not
one.
everybody's going to have that scenario, right, where the value is increased so much and then they can pull that money out. But the money they're pulling out most likely is going to be reinvested in more money making money.
Right.
And
Yeah,
I like my
it-
money making money.
Yeah, making money is a good thing, but that's a hard one to go from a 3 to a 6. Ooh.
But not in the right scenario if you can make that money, make more money than that 3% differential, right?
Right.
Yep.
What about the disconnect between the asking prices and the buyer's offers?
So the buyer's bid prices and the seller's asking prices, they're still, far off. The reasoning for that is, sellers are still in the process of adjusting to the current market, and then buyers are still being cautious on acquisitions with the current market.
Absolutely. So are you seeing a lot of the buyer's offers coming in substantially below 10%, 20%? Like where are you seeing the offers come in below, or are we even that high?
They're coming in low.
They're coming in low, really?
Yeah, since it's all based on income, the lower the income the property has, the lower their offer is.
Yeah.
So if a seller hasn't raised rents, say in 5 years, they're going to go off of those numbers instead of what the rents are today.
Yeah.
Where back when the rates were 3%, all the buyers were underwriting on pro forma numbers, and it was a euphoria. The market's just going to keep going up, and it's going to go on forever.
That's so great. Then we woke up.
I was going to say those euphoric moments are such a tease, right? They come into your life and you're like, this is the best. And then reality slaps you in the face and goes, hey, not forever. Everything's cyclical.
I'm going to buy a real estate property and I'm going to get $100,000 of gain in the next 30 days. So that was
I would like
happening.
that. You can be my agent for that.
Yeah, that was happening. That really was a thing in some cases. So where, as far as the offer prices are obviously coming in low. Is there somewhere where you're seeing they're meeting, they're coming to terms? Are they coming to terms? They're probably not coming to terms at the offer prices, right? There's some negotiations. So would you say how far below list price do you think that we're realistically seeing properties going into?
I've seen some 30% below list price.
Oh my goodness, that's huge.
Because buyers are they're kind of going in low on purpose because they're just so cautious right now.
Right.
But there's deals where, the sellers will sell at what the current value is, and there's multiple offers coming in right at what the seller wants.
Right.
But on the deals where, the buyers are coming in much lower, that's because, the seller's expectations are still high. They haven't really adjusted yet.
Right, and the property's been on the market for a while, I assume. We see this in residential. A property's been on the market for a while, and the buyers are like, hey, can I offer under? And I'm like, offer whatever you want. Let's just see what they say.
Right. The worst the seller says is no or negotiates.
I'm not embarrassed. I had someone tell me the other day, they said, well, I was talking to some agent and she said she wouldn't write an offer that low. And I was like, ha, I will.
You won't take an overpriced listing, but you're like, I'll write any offer. Go ahead. Just whatever you have.
You put the number there. I'm not shy. I will send it over. We'll see what happens.
Okay, so I'm a little cautious with that. I do like to make deals and I like to go, but I don't like unrealistic. Don't come at me when you're asking for 30, 40, 50% off. We're not there yet.
Well,
Or
yes.
not that I think we're going to get there. I shouldn't have said yet. But yes, when they
Yeah.
come at me and they want 40% off list price, I'm like, that feels stupid and greedy. So you're going to waste time? That's what we're doing now? We're wasting time?
And you're right. There is a point where it's not going to happen. But I'll tell them that. I'll say, hey, let's write this offer. If you want to write this offer, let's do it. There's a chance they might not even respond to you. They could laugh at us, and they could get insulted and never want to talk to you again. So we can't come back with a better offer because
that's
that
where
happens.
mine comes from is the fear of it, because I had that in the beginning. I was like, I'll write anything. And then I offended somebody who really would have been a great fit for my client, and I realized I did more damage than I did good in that scenario.
Yeah.
So
and that happens. It's just going in with warning and just saying hey, are you okay? If they never want to talk to us again after we send this offer, you could sleep with that, right? Are you okay with that? But if this is the house that you really want, you want to go in seriously, we should probably be a little more serious on the offer. But if we're just seeing what happens, we'll do it to a point. if we're sending in offers at like, they're $300,000 houses and you're sending in 100,000, I'll do it once to show you it's not going to work, but I'm not going to keep on writing those offers. I mean, that's ridiculous.
Yeah, that is ridiculous.
I have things to do.
And
with my
I'm
time.
all for getting a good deal. I'm not saying that I'm not going to write good deal offers for my clients, but I do want them to be aware, like, I need your offer to reflect what your heart feels.
Right.
If this is something that you really love, why are we playing so low? Let's just dip our toe into where it's not offensive.
Yep. And every time you make an offer, you also run the risk of someone else coming at the same time with a better offer, and it's done. There's no take backs at that point.
Yeah, that actually happened to me this week. What day is today? Thursday? Yeah, this week. That was a not fun day. They were adamant about being lower than I wanted, and there was no offers on the table when we made it. And within 6-8 hours,
I know.
they got
wow.
another offer, and it was slightly higher, and they ended up accepting it, and it was $2,000 different than what I told them to offer, or what I suggested. I can't tell them anything, right?
Yeah.
But I'm thinking, we should play in this range, and then they went with the other one, and they're like, but much like your seller coming back to you saying, okay, you were right, I made a mistake, let's list at your price. That's how the buyers were with me, like, okay, you were right, we'll make our offers better.
Yeah, and that can happen. You run that risk every time when you write a low offer. You run the risk of losing the property.
Yep.
And it's how bad do you want it? And I know with investors, when you're looking at commercial properties, there's some properties that they're just like, I really want that one, and that's going to be a risk if they come in low, right?
Right.
Yeah, even still in this market, and we're seeing activity up. There's more buyers out there shopping, so we're risking that even more these days, right?
So my buyers buy with their heart, usually with the home, right? Your buyers buy with the numbers and the profits. So do you ever have anybody like, I need that, give me that property, how do we get the best deal? And then you have to advise them to be like, let's do this, or are they pretty stubborn, like, no, it's only the numbers?
Most of the time, it's always the numbers, but if the property's in a good location, or like they like the location just because, they personally really like the location, then they might, get a little bit emotionally attached to it.
Yeah, which you don't see in commercial.
No,
You don't see emotion.
Like, rarely.
Yeah,
Yeah.
that must be nice for you.
Yeah.
Lucky guy.
It's all about if it's a good deal or not.
Yeah.
Yeah, it's how does it pan out? They don't care about the
Right.
color of the carpet or the color of the walls. They care about the numbers. How much money am I going to make at the end of the day?
Exactly.
And that's one thing that I've seen in a lot of like fourplexes and multifamilies that are like in the residential area that we work in, is they're no show. You can't like go tour these properties. You can't like take the clients and go look at them. They're usually occupied by tenants. There's no showing. So it's like when I have people shopping them, like, we really just gotta look at the numbers and see if it works out. Drive around outside, but
Yeah,
we're not
exactly.
like going and doing showing appointments in these. They're contingent upon inspection. You write the numbers. So people write those offers based off of what the numbers are looking like. Is that the same thing in your industry?
Yeah, exactly. It's all about the numbers. There's never really showings at all. It's just the buyers drive by the outside. If they like, the outside, the area, then they'll write the offer, and once it's accepted, we'll take a look at the units during due diligence.
Yeah, with the inspections and everything like that too. Yeah, that's for some people that are brand new, like they're just starting. This is their first investment property. They decide they want to buy a fourplex, and they're like, "Oh, let's schedule showings." I'm like, "No, that's not really a thing." They're like, "Huh? Like, how does that work? Like, you mean I write the offer before seeing?" I'm like, "Yeah, absolutely. Like that's common, most common.
That's industry standard.
Yeah, industry standard for that type. So so that's to be expected.
Right.
Yeah.
So you spend a lot of time in your office.
Yeah,
Behind a desk, yeah, you're not out at showing
don't
appointments
see
all day
sunlight.
long.
except when I get up and walk around because I'm tired of sitting.
Yeah.
Yeah, I've seen with a lot of commercial properties don't even have lock boxes.
No, it's very rare that there's a lockbox. I'm trying to think any deal I've done or anything I've looked at, I don't think there's ever been a lockbox on anything.
The only commercial lockbox I ever seen was in Mawapa. There was like an old general store that had closed down or whatever, and I was looking at it and I was like, wait, there's a lockbox there. Let's go check this out. I love a
see
lockbox.
what it looks like.
I spot those a mile away. I'm like, oh yeah, let's see what that is.
Yeah, that's our realtor superpower.
Yeah, but that was
for
a
anywhere.
weird experience, like going into an empty commercial building and sort of walking around, and like the deep freezer and all of the fixtures were kind of still there. It was sort of apocalyptic feeling.
Yeah, yeah, absolutely.
Yeah, it's not my wheelhouse, right? I don't do obviously a lot of commercial, but that lockbox had me intrigued. I drove all the way out there. I was like, I'm going to see it.
When I first got my real estate license, I was like, I'm really allowed. I remember I had a mentor, and I was like, I'm really allowed to like just go in any house I want to. And he was like, yeah, if it's key any, absolutely. I was like, this is okay. This is so
That was
awesome.
the draw for me to real estate. I was like, I want to see them all.
I'm just gonna spend my days looking at houses, and now
Yeah,
I'm
unlike
like, okay,
Blake,
well,
I
maybe
don't sit
not.
behind a desk most of the time. I usually like to go out in the world and see all of this stuff, because for me, my buyers and my sellers, it's always emotional or change in lifestyle or whatever. We don't have a lot of the numbers to worry about unless I'm working with an investor who's looking for rentals.
Right. So let's talk cap rates.
So, so the cap rates have gone up a bit. So the market
That's
cap rates,
interesting.
yeah.
Okay.
Well, they've went up since the interest rates have went up.
Okay, and can you explain for people that aren't sure what cap rates are, and what does that mean?
Sure. So a cap rate is the net income on a property divided by the purchase price.
Okay.
So if there's $50,000 in net income on a $1 million property, the cap rate is 5%.
Okay. All right. So that is, and really, when people are purchasing in your world, that is the number that they're interested in more than anything.
Exactly.
Exactly. And you see that advertised on buildings. It'll say like so many % cap rate on the sign.
Yeah, that's what everyone loves. They're like, what's the cap rate?
Yeah, that's the first thing they want to know. So those have increased with the market, everything that's happened over the last year, those have actually gone up?
Yes.
Okay.
So they've gone up. The reason why is because buyers want higher income because of the higher interest rate, so they need more cash flow to cover the debt service.
Oh, okay, so it's because it's back down to them offering lower on the price and everything like that
so
too.
that they have enough cash flow to cover the debt service, exactly.
Okay, perfect. So that's promising. So even with rates going up, the cash flow has increased.
So the cash flow, it stayed, well, the rents have gone up, so the cash flow has increased. But say a property that has $50,000 in net income at a 5% cap rate, if the cap rate in the market moved to say 6%, then it would be worth right around $800,000, so the value would have had decreased.
Okay.
Oh, you love numbers.
I love numbers.
It's like, it's my favorite.
Yes. So with the actual asking rents decreasing, are you seeing a lot of properties that are coming on the market because the sellers are just having too much losses?
No, a lot of sellers still, their expectations are still high.
Really?
Yeah, there hasn't been anything new come on the market that's been at a good deal at all.
At all? Yeah, yeah.
So you're not seeing those new home deals like we're seeing in
No,
the
I
commercial
wish
space.
there were new apartment deals like that.
Do new apartments get built often? I don't see those often
Really,
around
I
town.
see a lot of
Do you?
apartment construction.
They do, but they're the big like 100+ unit institutional grade stuff.
Okay.
Yeah.
Okay. Yeah. I guess there is like the Elysian or,
Yeah.
or
No,
whatnot.
that's
yeah.
all over the valley.
Yeah, they're
Yeah.
Everywhere.
Yeah, those are everywhere. So yeah, I guess I do see them. I just don't pay much attention to them. I'm more
You're
looking
like,
for a house.
those
I'm like,
don't
there's
make
a
me
new
money.
community.
They do not exist. I don't know you. I don't know you.
Yeah, no, absolutely. Yeah, so the you guys are. We're seeing like a lot of deals right now in new construction because of like the inventory, but you guys, there's not really any deals on the market, which is kind of what we're seeing in resale too. Sellers are, their rates are good.
Their rates
Their
are
payments are good.
They have
They have equity.
They don't have to make changes. So
Yeah.
they're just like, I'm good. No reason to sell now.
Yeah, we seen an adjustment, which was 17 to 20%, somewhere in that ballpark over the last year. But then we got to a point where they were like, "There's no reason to sell any less than that." Are you seeing that as well?
Yeah, a lot of sellers, if they can't achieve, the price they want, they just want to hold it.
Yeah, there's no reason. You're making profit. Why on earth? It just doesn't make sense unless you're losing money.
Right.
Right.
Yeah, a lot of sellers, since the value's gone up so much, they thought it was going to keep going and going and going. So there was a lot of sellers I was working with where they could have got these great prices, but they said no because they thought the market was going to continue. And then as soon as it started decreasing, everyone's a motivated seller, but they want the pre-interest rate hike
Right.
price.
Remember what it was last month? That's what I want.
Yeah.
That's what I'm looking for. Well, you should have done it last month then.
Right.
The American greed took over.
Yeah.
Right, right. And last quarter of last year, like as in the residential world, we all had a tremendous slowdown, like in units and
Oh
activity
yeah,
and
it was.
closed units.
They totally pumped the brakes on us.
Yeah, so like the volume of business that we did went down a lot. I think I closed last quarter 20 units less than I did the year before, which was huge. I in 2021 it was like 60. Last year was 42. So it was a big difference, and it was last quarter because of everything slowing down tremendously. Are you guys seeing that?
Yeah, so in the last quarter, based on what multifamily actually sold, sales volume has dropped by like 90% in the market.
Wow.
Okay, I saw that statistic and I was like scratching my head. I was like, is that real? 90%? That's way worse than what we saw.
Yeah.
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 It's just since, the sellers, they don't want to sell at a lower price and the buyers don't want to come up. So I guess the comps really haven't taken a hit because in multifamily, since the sales volumes dropped so much, no one's really selling.
Yeah.
Oh yeah.
Yeah.
And no sales, then nothing. You're not moving the needle.
It's like we're still in price discovery right now.
Yeah, okay. Are you guys a few months behind us? Like as far as like the catching up, like right now we're starting to see increase in activity
So
and
much
everything there,
increase.
like a notable increase in activity.
Well, when you went from stop to go, it's definitely noticeable.
Yeah. So are you guys, like when we started slowing down, were you guys a few months behind on slowing down, or did you, or does it work pretty consistently with what residential's doing?
We're probably a few months behind.
That's what I was thinking, yeah. I know your, in commercial closings take forever,
Yeah.
like months.
Yeah, well, it's a big deal in comparison, right?
Yeah, I guess it's not like a 2-week close. Don't worry about it. It's okay. Like you have a lot to do. Your due diligence, I'm sure, is longer than 10 days.
Yeah, it's usually 45 days. I've seen up to 60 days.
Jeez.
But when the market was going good and everyone was getting deals, there were buyers that were waiving due diligence. They weren't even looking at the property just because they wanted it to lock in that 3% rate and renovate it, raise rents, and hopefully sell it for a profit.
Yeah.
So I've been seeing a lot of that in the retail space. I know you're more multifamily. Do you dabble in retail?
On occasion, yeah.
Okay,
As long
because
as it's-
I'm seeing, at least through my scope, that people are picking up properties and reinventing them or re-tenanting them for higher rents.
Oh, yeah, exactly.
So that's happening. Is that stuff you're dealing with?
Yeah, that's very common in commercial.
Yeah.
Yeah, especially like those downtown, all of those like downtown complexes that are down there. People are really, that area is becoming popular again. Like, the millennials and the young people want to live there. So I've been seeing those that get like purchased and renovated and stuff
Yeah.
too.
Yeah, well, there's a lot of stuff going on around the valley where it's being built up and things that are being renovated, and we're seeing a lot of stuff like Huntridge area and stuff
Oh
like
yeah,
that.
Huntridge area, they're redoing that. And the education district that they're working on over by UNLV, that area is coming. A lot of changes
it's
over
really
there.
changing things like in surrounding zip codes around UNLV, like the 89121 and stuff. Those are seeing some the beginnings of some new building and some reconfiguring and reimagining what spaces look like.
Yeah, absolutely. Well, Blake, if people want to talk multifamily and they want to get their investment, and these cap rates are doing well, so that is good news. They want to get things moving along and talk about what they can do and what their next steps are. How do they get a hold of you?
They can reach me on my cell phone at 702-809-8387, or they can email me, blake@blakemultifamily.com.
Okay, great. Tiana, how do people get a hold of you?
Call me, text me, 702-379-9948. You could use my email, 702 Hunter, but don't expect
You should
a
just
quick-
call her. don't
She's
email
like,
her.
I emailed you, and I was like, thanks for telling me. I'll
Yeah.
go look now.
You'll hear from her next week if you email her.
Those are the
just call
facts.
her and
Yeah,
text her.
don't hit me up on Facebook. Don't email me. Just pick up a phone, call me, send me a text. I love a good text.
Yes, and Tiana is a buyer specialist. So if you're looking to buy a home here in Las Vegas, she's got that down. She is the best person to be out there. People love like looking at homes with her. She's so fun to be out.
looking at homes with people. And
Yes.
then Trish is like the yin to my yang. She's the listing specialist. She loves all of the listings and the photos and prepping buyers and whooping them into shape. So if you want to be whooped into shape by Trish, how do you get a hold of her?
702-308-2878. Thanks, guys. And please like, comment, share, download, tell your friends. And we will see you next week.
We will. Have a great week, you guys. Bye.
Bye.